Hey everyone, it's Nick Girosillo here with the Happy Home team, and joined again by our accountant Elizabeth Fiattarone. And in our previous video, we kind of chatted about what happens if you sell your primary residence and what are the tax implications of that. So as discussed, if you've lived there for at least 2 of the last 5 years, you could then theoretically be exempt from gains up to the certain limits. But let's say, what happens if I've owned a home, it's my primary residence, and maybe I need to sell it 6 months later. I have a job transfer, or I haven't lived there for that 2 years where I get the tax exemption. If I have to sell it within 1 year of owning it and it's my primary residence, what are the tax consequences in that case?
Well, the bad news is that it's now taxed at an ordinary income rate. Okay, not at the capital gains rate. And for most people, that ordinary income rate is going to be higher than the capital gains rate.
Okay.
Most people are going to be in a 15% capital gains rate.
Okay.
Where your ordinary income is probably closer to 22 or 24%.
Okay. So if I sell it in the first year and obviously can sometimes be tricky to make significant gains in 1 year of owning a real estate property, because you have your sales costs that come off, and sales costs are 9 to 10%. So you have to make at least 10% to even have a profit, so to speak, right? So I think beyond that would then be taxed at your income rate, whatever that might be for that year.
Right.
And that's if I sell it within a year, right?
Right, and that is, it's 12 months.
Sorry, yeah, 12 months, yeah.
Yep,
Okay.
and so it's not a calendar year.
Right.
If you purchase it in June, then it's 12 months is the next June.
Okay. So let's say I own my home for more than 12 months, but I need to sell it less than 24 months. So now I'm outside of that 12-month period where it would be taxed at my income tax rate. So now is it taxed as capital gains if I've owned it for more than 12 but less than 24 months?
Yes, it is taxed at the capital gain rate because you've owned it more than 12 months, but you don't qualify for the exclusion.
Okay.
The $250,000 per person exclusion.
Right. That's only if you've lived there for at least 24 months of the last 60 months.
Right. And historically, there have been some exemptions for people in the military.
Okay.
So if someone is in the military, they want to talk to a tax person and see if they qualify for any exemptions from these.
Okay.
rules.
Perfect. Got it. And as always, taxes are never a straightforward or simple matter. And so if you have any specific questions, feel free to get in touch with us. We can sync you up with Elizabeth. Just call, text, or visit us online at happyhometeam.com.